Let's get to Mike on the markets. Mike Giordano with Williams Wealth Management. Mike, we've been seeing stock prices bouncing up and down, but it's hard to believe that the businesses themselves are bouncing around that much.
No, they're not. Imagine, Jane, if you and I and all of the WYFF viewership right now went down to an auto repair shop down the street and we just started putting prices on what we'd pay for that business. The price would be all over the place.
Right.
That's what happens in the stock market. You have millions of people that are constantly putting prices on businesses every day, but the underlying fundamentals of business, how much money it's earning, its growth rates, those aren't changing that often.
That's a great analogy because we kind of look at stock prices, but we don't really know how to pull it into something that we can all understand. Thank you for that analogy. So with that analogy, if you're the owner of the auto parts place, do you just say, I'm not paying attention what any of these people are doing? Do we just sit tight as investors and just not pay attention to the market?
As an investor, you're buying businesses, right? And when you're buying businesses, you got to look at your time frame, just like a small business owner is doing. They're looking at a long time frame, and so the best thing to do, especially as an investor in the stock market, is don't pay so much attention to the bouncing around of the prices. Make sure you have a good strategy. As long as you got a prudent strategy, all that other stuff's noise.
Okay, what about variety? I know that a lot of people who are older and retired really live on the dividends. If they've got too much invested in one stock or in one sector, might they get in trouble?
Yeah, that's where you create more problems for yourself. Diversification is this word that sometimes people hate because they're like, you're just taking return away from me.
Yeah.
But what it does is it offers you the potential for protection. You know, if you own a bunch of different businesses in different types of industries, in different countries, all of that stuff blended together generally gives, smooths out your ride a little bit.
So when one's not doing well, somebody else is.
Exactly.
Okay, let's look at houses. You always hear people say bricks and mortar, bricks and mortar. However, sales of newly constructed homes are down. According to research, they fell 17% last month. That's the lowest since the early days of the pandemic in April 2020. Do we invest in brick and mortar, or just wait for a little while?
Yeah, so that was talking about people wanting to buy new homes, right, and new construction, and you can see why this is happening. You've got this double whammy. We've had massive price increases, inflation, right, on home prices over the last several years. Then you stack on a lot more expensive interest rates, right? We went from 3%, right now we're at like 5.5% in that range, which is normal interest rate. However, when you come from 3%, it's almost a doubling. I looked at my own house. I told my wife, I said, Melissa, if we bought this house, we bought it 3 years ago. If we bought it today, with today's interest rates, with the price appreciation, our mortgage pay would be almost double.
Wow.
That's a lot.
Yeah, that perspective is very important. But also to keep in mind, 5% is still okay.
It's still okay,
in the
right?
long run.
Exactly.
Great.
It's a lifestyle decision.
Exactly. Mike Giordano, thank you so much. Always appreciate your
Absolutely.
advice.